HIMS and HERS has been one of the most volatile stocks in the market this year. I've had to change my recommendation on HIMS and HERS stock multiple times this year. The last time I visited the company and evaluated its results was on September 22nd, when I informed investors that the stock did not look attractive and not to buy at those market prices. Now, that's turned out to be correct as the stock price is down roughly 29% just in the last month alone. Because of this big stock price decrease, investors are asking me to visit the company again and see if a upgrade is warranted given the lower valuation. That's what I'll do in this video here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So HIMS and HERS stock price is down 29% over the previous 30 days, and there are three primary factors moving the stock right now. First of which is President Donald Trump's announcement on weight loss drug pricing reductions and the impacts on competition for HIMS and HERS. Remember, HIMS and HERS, there's a lot of compounded versions of those weight loss treatments on the HIMS and HERS platform. And if Eli Lilly and Novo Nordisk are selling their treatments, the branded treatments at lower prices, the competitive landscape for its compounded versions become less attractive. Of course, HIMS and HERS has also had a volatile relationship with Novo Nordisk. First, they were buddies, then Novo Nordisk was suing HIMS and HERS, and now seemingly they're buddies again. And there's been a lot of question marks surrounding this specific part of HIMS and HERS business. The weight loss treatment part of HIMS and HERS business has been extremely volatile given the changes in regulations and supply constraints from Eli Lilly and Novo Nordisk. All of that has created a lot of disruption and contributed to the volatility for HIMS and HERS stock so far this year. Another factor causing investor sentiment to turn negative on HIMS and HERS stock is that CEO Andrew Dunham had been selling some of his shares, and that always creates skepticism from investors and concern from his investors because nobody knows more about the business than the CEO. So if the CEO is selling his own stock, what does that say about the company's future prospects that we as investors don't know about? That's the concern that always rises when you see insiders selling shares. But I usually downplay these sentiments because I understand that a CEO has many reasons for selling a stock. If, for instance, you're the CEO of the company and you own significant shares in the company, a lot of your wealth is tied up in the company. At that point, it makes it more difficult for effective decision making. If you know that not only is your job at stake, but also your family's wealth is at stake if you make an incorrect decision at the company. And selling some of your shares in the company that you're CEO and diversifying your family's wealth away from the stock of the company you're running allows you to be a little bit more separated from the impacts of your decisions and allows you to make more effective decisions because it's a lower risk, lower stake environment. And so you're not as risk averse. You're not avoiding taking big chances with potential big payoffs because you don't want to jeopardize your and your family's wealth. So that's one of the reasons why I'm not so bearish when I see insiders selling shares. Sure, of course, I like the leader of the company that I'm investing in to have some skin in the game, to have some ownership equity in the company they're running, but I don't need them to have their whole family's wealth in the company or 80 or 90% or even 50% of their wealth tied up in the company's stock. That might actually go against me, right? The reason you want the founder or CEO to have skin in the game is because you want them to make decisions from the viewpoint of a shareholder, not decisions from the viewpoint of the CEO, which can oftentimes conflict with the viewpoint of the shareholder. And so some of that benefit is reversed when the CEO or founder owns too many shares of the company that they're operating. So there's a balance here, and it's not always the case when I see insiders selling that I feel like the CEO does not run the company from the shareholder viewpoint. And in any case, I don't just look at a simple item like the ownership percentage of the CEO in the company they're running to come to a conclusion if the CEO is operating the company with the shareholders in mind. I actually look at the decisions that the CEO is making to determine if I like the way they're operating the company. Sometimes I'll view a CEO that doesn't have a significant stake in the company, but they are an excellent CEO and I love the way they're operating the company. And other times I see CEOs that have a large stake in the company and I see them make the worst decisions and I don't like the way they run their company. So, in general, yes, you would like to see the CEO of the company have skin in the game, have ownership in the company that they're operating. But I think that's a lazy way to look at this situation and make a conclusion. I think a more prudent way is to evaluate the decisions that the leadership is making and determine yourself if, as a shareholder, you feel like the CEO is making decisions to your liking or not. Okay, I think that's a more prudent way to view these situations and not just jump to a conclusion the CEO is selling shares. Bad, bad, bad. Okay, the last thing. So the company developed its menopause treatments over the previous month, but broader market pressures are overshadowing those positive developments. The company also reached a milestone with 2.5 million users, subscribers on the platform, but all of that had been overshadowed because of the focus on the weight loss segment. And that segment alone had been taking a lot of investor attention, and changes in policy and changes in regulation are impacting investor sentiment regarding that one segment. But view Hims and Hers as bigger than that. I view them as serving the healthcare needs of millions of individuals in a category that's ripe for disruption. I don't think I've heard anyone from any part of the world talk about healthcare in their country as something they like. So I've heard people in the United States complaining about the healthcare here in the United States, how it's so expensive and the results are so poor, and people are complaining and wanting disruption. Then I hear people from other parts of the world talking about how treatments in those parts of the world are not very good, they're not very effective. Maybe the prices are lower, but the outcomes are also not as attractive. And so I don't see one part in the world where people are happy about the healthcare system. So this is a category that's ripe for disruption. Whenever I see this, I view it as a category that's ripe for disruption and an attractive opportunity for companies that are aiming to disrupt the industry. Now, they may or may not be successful at disrupting the industry, but I view the opportunity as lucrative for Hims and Hers to take this chance to try and disrupt the industry because consumers are ready for someone to come in and make this disruption. So, given the recent sell off, the valuation now looks more attractive. Hims and Hers is selling at $35 per share, and I calculated an intrinsic value at $44. So it looks undervalued based on my proprietary DCF valuation metric. Furthermore, when I go to fiscal.ai, which is my preferred data provider, there's a link in the description where you can get charts like these. Looking at the company's market multiples valuation, on a forward PE basis, it's trading at a forward PE of 55, which is on the lower end of where this stock has traded for according to that valuation metric all year. And similarly, with the price to OCF of 20, it's on the lower end of where it's traded for according to that valuation metric. And given its growth prospects and the profitability expansion and the total addressable market, I see this as an attractive opportunity now. So, to answer the question I posed in the headline, yes, I do see this as a situation that requires an upgrade. So, I am upgrading Hims and Hers stock to a buy today, November 21st, 2025. Hey, if you value my process for researching stocks, I think you'll appreciate access to my spreadsheet containing my discounted cash flow valuations, which calculate a fair value for over 200 companies. It answers the question, what's a good price to pay for a certain stock? You can get access by joining our channel at the investor tier or above. See the link in the description or click the join button below to learn more.